My name is Karwowska, and I'm the Vice President of Corporate Development and Investor Relations at Newcore Gold. I've been with the company for about 5.5 years now. We are a publicly traded company. We trade on the TSX-V as well as the OTCQX. Please note that I will be making some forward-looking statements today. Please refer to our full disclosure on the website. So at Newcore Gold, we are advancing our NG Gold project in Ghana. 3 key things that I hope you take away from this presentation today. First and foremost, this is a team with a track record in the industry and one that is strongly aligned with its shareholders. 15% of the equity is held by management and board. We have a project that is underpinned by a PEA study that was released in 2024, and we are now advancing that to a pre-feasibility study, which is targeted for completion by the end of June. And in parallel, we're very much focused on the longer-term exploration potential of the project with a 45,000-meter drill program underway. Our team is led by Luke Alexander, President and CEO. He has over 25 years of experience in the industry, comes from an investment banking and institutional sales background, has very strong relationships in the industry. Greg Smith is here with us today as well. He's our VP Exploration. He is a geologist with over 35 years of experience in the industry, specifically looking at these greenfield large deposits. And then our company is also founded by Doug Forster and Blaine Johnson. They have been behind recent successes in this industry, including Newmarket Gold that sold to Kirkland Lake, and then more recently Calibre Mining, which merged with Equinox. So 2 examples of companies where they've created a lot of shareholder value for investors. And as a result, I believe that you see that reflected in our share structure and our share ownership. We are 55% institutionally held by long-term value-focused funds, and we also have very strong capital market support. In terms of valuation, we have a current market cap of roughly 230 million Canadian. We ended September last year with 11 million of cash in the bank that funds the drill program, that funds our pre-feasibility study. And then importantly, we just had another 10 million come in from warrants that expired yesterday. So we are very well positioned to continue to advance the development of the project. Our NG Gold project is located in Ghana. Ghana is a phenomenal jurisdiction. It is Africa's top gold producer. It is the 6th largest global producer of gold. It has a stable democratic government. It's English speaking, English rule of law. You don't need security in country. But importantly, look at who's operating in country. 4 major senior gold producers have operations in Ghana. And notably Newmont, the world's largest gold producer, just invested $1 billion to expand their footprint there with their cornerstone Ahafo project. Our NG Gold project now, it is located in the southwest corner of Ghana. There's 2 prolific belts in this region. We're located on that Sefwi-Bibiani belt. The key takeaway here is we are on a prominent gold belt that hosts a number of mature operating gold mines with significant endowments. It highlights the longer-term potential that exists on our project. So Newmont's Ahafo mine, that has a gold endowment of over 20 million ounces and growing. Asante Gold, which has the Bibiani and Chirano mines to the north of us, has an endowment of over 5 million ounces per mine. At NG, we've really focused our drilling on the shallow mineralization within that first 100 to 150 meter vertical depth. So we believe that with exploration and drilling on our district scale exploration opportunity, 248 square kilometers, that there's a real opportunity here longer term for resource growth. In terms of what we have underway today, we have a 45,000 meter drill program underway, fully funded. The first phase of that drill program was very much focused on the development work that was required for our pre-feasibility study. So 30,000 meters of drilling has been completed. That had very strong success with 98% of drilling encountering mineralization beyond the limits of the pits that currently constrain our resource. We're now on to an exciting phase 2 of that drill program with 15,000 meters dedicated to exploration and currently focused on targeting those high-grade shoots that exist on our project. A great analogy for the long-term potential that exists at NG is Chirano. Chirano is located 50 kilometers to the north of us on the same shear zone. It has been in operations for over 20 years, has an endowment of over 5 million ounces. So what you see here is a long section of Chirano compared to NG. Chirano started as a series of open pits, shallow open pits. Over time, with exploration development, they defined these higher grade shoots on the project, and they're now mining down at a vertical depth of 800 meters. You compare that to our NG project, where the majority of the mineralization defined to date sits within 100 meters vertical depth. This provides a long-term opportunity for resource growth as we continue to find these higher grade shoots. We have the proof of concept on our site already with the limited amount of drilling that has targeted that 200 to 300 meter vertical depth. And that is part of the focus that we currently have with our exploration drilling. So in January, we released the first results from that deeper diamond drilling. It targeted our Boyne deposit at NCAU, which is our second largest deposit. So what you see here is a long section of Boyne. These are the pits that currently constrain our resource estimate, along with all the drilling that's been completed at Boyne to date, along with that higher grade mineralization in the resource currently that is showing us where these high grade chutes potentially exist. With the 3,600 meters of drilling that we reported in January, we focused on 3 areas at Boyne along a 6-kilometer strike length. There were 3 key areas that we believe host these higher grade chutes, and we've had strong success with that drilling. So with the 2 northernmost chutes, we did encounter higher grade mineralization within wider zones, including 3.5 grams per ton over 23 meters, and that included 6.9 over 8, and then another zone of 1.7 grams per ton over 25 meters, including 3.22 over 17. So we're clearly starting to see these high grade chutes form. And then excitingly, within a southern chute that we tested, we also saw our first encounter of visible gold within our diamond drilling with 148 grams per ton over a meter, and then another intercept also nearby of 174 grams per ton over a meter. So what we have here is continuing to prove out that potential that we have with our exploration drilling of the high grade potential that exists at depth. And importantly, this has only been tested down to 200 to 300 meters vertical to date, so a lot more to come on that. But in parallel with that exploration, we are very much focused on development. So we put out a PEA study in mid-2024 that highlighted robust economics for an open pit heap leach mine at a $3,000 gold price, US $971 million after-tax NPV, producing just over 1 million ounces over a 9-year mine life. The key here is leverage to gold price. And when you look at where we're trading currently, our current market cap is roughly 170 million US. You look at that NPV that's been defined in that PEA that we put out, we're trading at a fraction of that potential economic value. So we are laser focused on advancing the development, de-risking the technical aspects of our project, as we believe that that will create a lot of shareholder value and will have our market cap better reflect that value that exists on the project. So the last 18 months, we have been laser focused on that development path. What do we need to do to advance this project? That includes the drilling that I've already spoken about, includes hydrogeological and geotechnical work, metallurgical test work. We commissioned our pre-feasibility earlier this year. It is on target to be completed by the end of June. As Brian mentioned, the last 2 years, we've seen a very different gold market environment. We're now trading at $5,000 gold. So as part of that, one of the key areas we focused in on was what can we do to make sure we're maximizing the value of our project and optimizing it. So with all the work and all the technical work that was done, one key area that we focused in on was recoveries. And with that, a decision was made to move to a standard mill and CIL flow sheet to be able to maximize those recoveries. Given at $5,000 gold, every single % of recovery that you can achieve can have a very significant impact on the value of your project. And with a 10 to 15% additional recovery that we believe exists, given all the test work we've done relative to the PEA test work, we believe that this is a real opportunity to improve on the economics and also to highlight the best possible economic project going forward. So with that, we have a really exciting year going forward. Obviously, pre-feasibility study, as I've mentioned, that is on target, on track for the end of June 2026. So that is a near-term catalyst. We're drilling with a 45,000 meter drill program underway. So lots more to come in terms of drill results, targeting those high-grade chutes and potential on our project. And importantly, we're funded. So as of yesterday, we had warrants on the register that expired well in the money. That brings in an additional Canadian 10 million in cash, which gives us a lot of flexibility going forward in terms of the development path and our ability to expand on our drill program. So with that, we're very well positioned, a management team that's aligned with shareholders, strong capital structure, funded for our development work that's underway, and lots of catalysts to come this year. Please come say hi at the booth and follow us on social media. And thank you very much. Thanks, Brian.